Hey, this is Sasha Evdokov, founder of TRADERSFLY and InvestingHelpDesk.com, here to answer a few of your frequently asked questions in detail. Now, today's question is, what is the difference between a limit order and a market order, and really, when should you use one or the other? Think of a market order as paying the market price when buying or really selling a stock, meaning you would pay whatever price is necessary to get your shares. The example I always like to use when talking about a market order or market price is when you go into a restaurant and they say market price on a fish, and you're going to pay whatever that current rate is to get that fish sandwich, to get that order completed. Now, when it comes to a limit order, with a limit order, you get to specify the price you want to pay for the stock. Now, you get favorable pricing, but you may not get filled on your order if your price is not met. That's like saying, let's say a swordfish steak, maybe it's your limit price is $9, and if it's more than $9, then you're not going to buy that swordfish steak per pound. So in either case, that's the difference between a market order and a limit order. So let's take a look at applying this knowledge on the charts. So here, if we have Amazon, you can see Amazon right now is at $626 per share. Now, if we look at the dashboard and we were interested in going in to trade Amazon, we were looking to buy that stock, I can go ahead and right-click and buy this stock, and now you'll see this order populate into a market order. Now, in here, I can do a limit order. There's also a stop, limit, trail stop, so there's a few other order types, but the basic type of order is a market order, and you see that the price is market price. So right now the market is closed, but once the market opens up, if I went ahead and placed this order, right click and confirm and send, if I place this order in, I would get filled at whatever the current price is for that stock. So currently we are trading right around between 627 and 629 on this, between this mid price and natural price. So somewhere in the middle is probably where I would get filled. Now, if the stock jumps to 655, then I may actually get filled at 655 at a much higher price than what I expect. Now, this is very different than when you compare this to a limit order. So I've put a second order type, and let me change this to a limit order. Here you can see the price now, the price field gets changed into a price that you can actually manually type in, and I can move this price down a bit, or I can move it up a little bit. So if I move it down, I can get filled at a much lower price and try to nibble a little bit cheaper into that stock price. So if I wanted to get filled a little bit less, try to see if I can kind of negotiate my way and get a lower price, then I may be able to get that lower price. Now, unfortunately, because it's a limit order, that's the most I'm willing to pay. I may not get filled on this if the stock price continues to run higher and higher and higher, because my limit order is 627.83. If the stock price went to 630, then went to 635, then went to 640, I would have to continue to shift this limit order higher and higher in order to get filled. I'd basically have to chase it. So when do you use one or the other? Well, a market order is great if you need to get into a stock right away, really fast, typically day trading, and you're trading liquid stocks. However, typically I will still use a limit order. For me, it's just I will set the limits a little bit higher or beyond it. So here's a natural price, for example. Then I'll go ahead and bump it up a few pennies more, because my goal is just to get filled, even if I want to get filled very quickly. So I'll bump it up a few points, but I don't want to pay extreme prices, because this at least limits me, even though the current price is at 620 here, and the ask is 629, even though I might be willing to pay, let's say, 630, 631, I could set a limit order to 630, 631, but that way, if I set it at a market order, I may get filled at 635, 637, so the stock price can run up on me. So For me personally, I still prefer to use limit orders. It's just I will set them a little bit higher on the limits if I'm doing a little more active trading. But in general, I prefer limit orders so that way you don't get burned, because the same thing happens when a stock is moving to the downside. If you're looking to sell the shares, you also have the same concept of limit and market orders. So again, you want to make sure that market orders are great for liquid stocks that trade very heavily, and you need to get in and out right away very quickly. But a limit order, you get to specify that price. Whereas with a market order, it can run up or run down on you in any direction. So you need to be really careful. So in the same situation when you're talking about selling a stock, with a limit order, you're able to, again, sell it at a little bit of a higher price and play around and bump around the prices to try to get a little more favorable pricing. So that's the difference between a limit and a market order. If you want to see more questions and answers, feel free to visit me at investinghelpdesk.com or get detailed investing and trading education at TRADERSFLY.com. Now, if you'd like to take a look at the podcast, courses, or see some of the critical charts that I post, or even subscribe on YouTube, then just click one of the buttons right here on this page, and you'll be taken right away to that section. Thanks for joining me, and I'll see you next time.